When you look at the nation's leaderboard for annual rent growth, you see most of the usual suspects: San Jose, San Francisco, Austin, New York. But then at the number 10 spot, there's a surprise inclusion: New Orleans. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your New Orleans update. Let's get right to it with that annual revenue change chart. You're going to see your top 5 markets nationally are San Jose, San Francisco, Seattle, Austin, and Minneapolis-St. Paul. San Jose way above the pack at 12.6%. The others around 8 to 9%. And then the next group, ranking 6 to 10 in the country: Portland, Oakland, Phoenix, New York, and New Orleans. We've talked about Phoenix being one of the surprise stories so far in 2011, but how about New Orleans? This is a market that no one expected to see this high. So what's happening in New Orleans? Let's start with the economy. Some good numbers. In the year ending June, New Orleans added 4,300 jobs, growth of 0.8%, and the numbers for July were even better. Not that the July numbers impact the 2Q apartment market performance, but these numbers are good enough that I do want to share them. Growth of 13,400 jobs, 2.6% net growth, a very healthy jump relative to what we see elsewhere. And the big gains for New Orleans are coming in the education health services category as well as the leisure hospitality services category. And with jobs coming back, New Orleans is starting to see some good progress in apartment occupancy rates. Occupancy had been hanging around 90 to 91% for much of 2009 and 2010, but then we started to see some good growth in the first half of 2011. Occupancy is now at 92.3%. Not great by any means, still a lot of work to do, but that is growth of 1.2 points annually. And we're still seeing a lot of variation by submarket. Occupancy rates are strongest in the upper tier areas of central New Orleans, which is at 96.9%, and St. Tammany Parish at 93.9%. But on the flip side, we're still seeing rates as low as around 90% in the West Bank, in both Jefferson Parish and in Orleans Parish. But the real improvement is coming in rents. You can see annual same-store rent change was negative in New Orleans through all of 2009 and most of 2010. Cuts got as deep as 5.6%, but now effective rents are up 5.2% year over year, well above the U.S. norm of 3.8%. And that compares very favorably in the South region. Only Austin at 6.4% posted more rent growth in the year ending June, and coming in just below New Orleans were El Paso, Louisville, Nashville, all of them just under the 5% mark. And in New Orleans, we're seeing good rent growth all across the board, but especially in 1980s generation product. In that group, same-store rental rates are up 8.1% year over year. Looking ahead, the key question for New Orleans is whether it can sustain the momentum we've seen in the economy. But even if we can't, it's unlikely that New Orleans will continue to record this significant of rent growth, given that vacancies remain very problematic in some key submarkets. And that wraps us up for New Orleans. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with MPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.